Well, hello traders, it's Dale here, and in today's video, I'm going to show you the most awesome trailing stop tool you've ever seen for MT4, and that would be my trade panel here. If you're into trailing stops, you're going to love this. Okay, it's got a lot of cool features which I'm going to walk through in this video. We're just going to focus on the trailing stops here. If you're interested in the other parts of the panel, I've done previous videos there explaining those. But in a nutshell, what you do with the panel is you configure your trade. You just select the options that you want, there's different strategies and whatnot, and you can select a trailing stop, press buy or sell, and basically the trade that you've set up will have a trailing stop applied to it as well. So what I'll do is I'll start off nice and easy. We'll do a trail by risk reward ratio, okay? And what I'm going to have to do is I'm going to have to load the panel in the back tester, and that way we step through the market history and watch the trailing stop actually unfold live in the back tester there so we can see it working. Alright, so here we are, we're in the back tester and we've managed to load the panel inside the strategy tester here. I'm in visual mode so we can see what's going on. So let's see if we can place a trade and visualize a risk reward trailing stop. Now, trail by risk reward basically means you have your entry price. Okay, we have your entry and your stop loss price. Alright, and that distance between your entry and your stop loss is going to become your risk value, and we're talking about risk in pip size here. So the panel remembers the risk size of your trade setup, and then it will actually trail by that amount of distance here. And we actually have a multiplier here, so we've asked it to trail by 2 times our initial trade risk. So whatever was between our entry and our stop loss, okay, this distance times 2, and we can multiply that. We could do times 10 if we really wanted to. Be a little bit pointless though. Okay, so we've got a risk reward by 2, so I'll just set up a basic trade here. Alright, so what I've done is I've gone back in history to 2014, and we've basically caught the top of a move here. So this move will allow us to visually demonstrate the trailing stop. So we'll target this candle here, which is candle 1, 2, 3. We do not want to target because we want to see this thing in action. So we go by trailing stop risk reward ratio by 2. So if we hit sell, our order should pop up. Let's have a look at our stop loss distance between our entry and that. So it's about 50 pips or so, 51 pips. So we'd expect our trailing stop to be twice the size of that, which is about obviously 100 pips or so, just a little bit above 100 pips. If we forward in time here, as the market starts to move down, we need to move down about 100 pips. So just about now, it's actually starting to trail. So we've hit twice this distance, okay, from the stop loss, because we're measuring from the stop loss, okay? So 1, 2, and now we're starting to trail. So let's watch this unfold. Okay, as the market, see that was a little quick. We can see we're about break even now. If we keep pushing the market down, come on, there it goes. We can see the trailing stop trailing behind, obviously by about 100 pips or so. So if we measure from the lowest point, we should see about 100 pips there, which is just about right. Okay, so that's the risk reward trailing stop in action. You can see this would have been a very nice move to catch if we had a good trailing stop on there. And it's going, it's just following all the way down. Before I go any further, I just want to explain one feature of the panel, right? So normally with any kind of trailing stop tool, if you close down MT4, you close down the tool, power goes out, Windows does some silly restart or update, thank you Windows 10, the tool will lose its memory of what it was doing before it was shut down. So typically a trailing stop tool, close it down, open it back up, it's just starting from fresh. It doesn't know anything about any open trades. Well, the panel here, it actually remembers what it was doing before it was shut down. It saves its progress, has like little restore points inside the memory, and it's all automated as well. And to see what the panel's actually doing, we can use the trade monitor. So we click on the trade monitor, we can actually see that in the monitor here, it's got ticket number 1 under its control. So this is ticket number 1, obviously, and it's controlling it. It just says it's trailing a stop. Now, at any point, we can actually remove that functionality from ticket one there. So if I click remove, what it's going to do is it's not going to delete the trade, but it's actually going to remove the trailing stop functionality from it. It's basically going to disconnect the panel from that trade. So we hit remove. Probably need to go forward a tick. There we go. And that's cleared. So if we forward through the tester now, that stop will not move. See, we've moved down a fair bit and that stop is just staying where it is. Okay, the panel is not touching that trade anymore. Okay, so that's two features of the panel. You can remove the trailing stop when you want. It also has internal restore point. So if you close the panel down and you had a trailing stop going, then we can reopen the panel, okay, and it will remember the trailing stops there, and you'll always be able to see it in your trade monitor here, okay. Okay, I've reset the strategy tester and we're going to be looking at the candlestick trailing stop here. All right, so we're all set up for another test run. Now we have two options here. Basically what's going to happen is trailing by candlestick high or low. If we're in a short position, it's going to trail down by the candle highs. If we're in a buy position, it's obviously going to trail up the candle lows. Okay, and we have a few different options here. Normally it will skip inside candles. So if a candle, all right, it closes within the previous candle's range, it will not use that as a trailing stop point. We can allow that if we want to here, and only trail candles closing in the trade direction. Okay, so if we're short, then it's only going to trail on candles that actually close bearish. All right, it will ignore candles that close bullish. But let's just do a standard run here. Let's sell. That should pop up on the next tick. All right, so what do we expect here? We just expect the market to trail down every single candle high, and it will. Let's just forward and see what happens. Straight away, the stop has moved from here to here, okay? Because on the new candle, this candle here, basically the stop moved from up here and went all the way down here on the next candle open because it detected a new candle opened and it trailed the stop down to that candle's high there, okay? All right, so we can see the market's trailing down these candle highs as expected. Okay, it's actually a pretty aggressive trailing stop, but pretty good for things like Renko candles, right? If you have a Renko candle chart, that's typically where you would use this candlestick trail. All right, so trail down that. Okay, you get the point. It's too aggressive for this market. Let's actually do another test, and we'll only close on candles that do trade in our direction, close in our direction. So we'll do another sell. The trailing stop has straight away moved down to this candle because it does meet the criteria. It has closed in our favor. All right, now see how there's a few candles that have actually formed, but they're bullish candles, so we're going to ignore them, and it's maintaining its stop at the last candle high that actually closed in our favor here, this one. So you can see that's basically working as anticipated there, and we get stopped out. Let's hit another sell. Why did it trail down there? Oh, okay. It actually is trying to trail down from here to this candle here, but because of the minimum stop loss trail distance, that's another thing you need to know. MT4 has an internal stop loss limit, and you cannot exceed that, otherwise you'll get server errors. So what we've actually done in the panel is basically put a bit of logic in to determine, is your trailing stop loss destination exceeding that limit? If it is, just go to the minimum allowed. And that's basically what's happening because we're trying to go down here. The market price is here, and obviously we can't trail past that. And, there's our little buffer zone there, our little buffer zone here. So it's a couple of pips, three or four pips there that we have to respect. And basically that's just going to stop a lot of errors getting generated on the server. And, if you have a poorly coded program that's just generating a lot of errors on your broker server, that you might get banned or something like that. So that's what that's for. So that's probably going to get stopped out. Okay, yep. Let's try sell one more time. And straight away, it does move down to the last bearish candle high. Let's see if it can maintain this. And it's going down, And, okay, the next bearish candle high was higher than the previous candle high. So it's obviously looking to trail down further, not, go back up higher. All right, so go on. And there we go. It's basically trailed down to the next one. which is here, and then it probably trailed down to there as well. And yeah, so you can see this is basically working, trailing down the candle highs. All right, so let's move on to the next trailing stop. All right, I've hit the reset and I'm ready to show you the next one, which is trail by EMA. So pretty straightforward. Select the EMA and the EMA trail value. So this is the period of the EMA. So we'll do a 20 EMA trail. What we'll do is we'll actually add these 20 EMA to the chart so we can visually see it tracking the EMA as it does move down the chart. So make sure we're on exponential there. We definitely want to apply that to the close. So we've got our EMA added and we'll short the market. Let's see. And okay, what's happening here is the stop was originally here, but what it's trying to do is straight away it's trying to actually trail down to where the 20 EMA is now, but because of that, obviously it would be an illegal move to trail a stop down beyond the market price. But what it's done is it's tried to trail the stop and it's hit the safety limit here, the limit which is allowed, the closest point which you're allowed to trail to before we start generating those errors I talked to you about before. So I'm not sure if this is going to survive. We may have to wait for the market to actually dive under the 20 EMAs before I can show you this properly. All right, so we got stopped out. So let's just tick forward until, okay, we're under the 20 EMA now. So let's actually short that again. That should be fine. Sell. Okay, so straight away, the market, the stop was placed there and straight away it has moved down to the 20 EMA there. So it's trailing that. So hopefully we can just dive down now and watch this. As you can see there, it's actually tracking down the 20 EMA. So let's continue and just watch that. Okay, it's got stopped out. Sell. All right. Okay, see that? We're following the 20 EMA down as it goes down. All right, so you should be able to visually see that it's tracking the 20 EMA. All right, there we go. So very nice. So that's the EMA. We can change that to any value you basically want. All right, let's have a look at the next one. All right, so let's check out the fourth option here. This one I'm excited to show you. It's trailed by volatility. If you watch the video on the stop loss section, you would understand how this works, but I'll quickly cover it again. And to do that, I'll use the recoded ATR. We're going to use an ATR a period of 20. So two things I've done here is I've made it display as a histogram instead of a line, and I've made it to basically display its data in pips as well. So with the average trading range, what it does is it looks back whatever period you set here. So we definitely want to put that up to 20. 2 would be way too sensitive. And we have a multiplier here as well. So whatever this value ends up being, which is the previous value is 26 pips at the moment. Okay, we can set a multiplier and we can double, triple, quadruple that there. Okay. Now, how this works is like this. The market, well, the ATR will be a lower value when the market is consolidating. Okay, and when the market is very volatile, okay, we've got a lot of movement. Okay, then we see the ATR pick up in value as well. So the idea here is the more volatile or the more energy that's in the market, the higher the stop loss or the wider the stop loss you will have, and the thinner the market or if it's very inactive, we've got very low trading ranges. Then we get very low values down here because the market's not very volatile. So your trailing stop will have a very short distance. It will trail very tight. So it's a trailing stop that's dynamic and it adjusts to the market conditions. A lot of volatility. Okay, it expands the trailing stop to give it some room. Okay, the market's trading very tight. Okay, the trailing stop comes in really tight and it's basically trails the market, fairly close there. So I'll leave this ATR that I customized for this demonstration, and we'll see the values of the ATR here, and hopefully we'll be able to track that with our trailing stop. And everything's all set, so we'll hit sell again, and we'll step forward. So right now, originally the stop loss was up here, but we've moved down here, and we've trailed to a point of, let's say, what's that? It's about 27 pips or so, right? And the volatility, trailing by volatility, it reads the previous candle's value. okay, because that's the last cemented in value. The current candle's value is, always fluctuating. So yeah, I thought it would be better to use the previous candle's value since that was the last sort of like cemented in value that it's not going to change anymore. And that value is at the moment, it's 26 pips, 26 and a quarter. Okay, so that's about right there. So about 26. Can't get right on that line, but yeah, you can see it's roughly about 26 pips. Okay, so as we step forward, this trailing stop is going to change. So hopefully it will survive. Be very careful. All right, we've got to take the lowest point. So we trailed by about 30 pips, and so we can see the market. Not much is happening with the ATR at the moment. We've got stopped out there. Let's increase the average trading range by giving it a multiplier, so we've got a bit more room. All right, so we should be trailing by about 24 pips times 2. There we go. So from the lowest point, we have about a 50 pip distance there from the stop loss, because we're measuring from the stop loss to the lowest point as the, where was the lowest point here, and it basically was down here, so it means the stop loss should be 50 or so pips behind. So we can see that's working there. We should have set this to no target, so we screwed ourselves up there. So this is probably going to hit target. But as we can see, what are we at now? The ATR isn't really changing much, so we're not really seeing any dramatic change here. Okay, let's do another run here, see if we can. So we can see that the ATR is actually getting quite low here. So we're going down into about 20 pips now. So we should have the stop loss trailing about 40 pips or so behind. As we can see, that is definitely the case. About 44 there, because we're probably about just over a little over 20. You can definitely see the stop loss is changing dynamically. So we've just trailed down now. So that definitely, we should have taken the last reading, which is only 19 now. So we can see the ATR is really squeezing, and now we've only got a 35 pip stop loss. So we can see we've got to remember we multiplied by 2 here. The trailing stop's getting tighter and tighter. Now we're picking up. We're picking up again. Okay, we're back up to 23 pips. So the trailing stop should start to expand. So we're, 23 times 2, nearly 50. It's about 48 pips stop there. So we can actually see the stop loss here. It's actually expanding and contracting with the market conditions. If we just zip forward, we're going really thin again, 19 pips. Maybe I should do an example. Let me do an example with an ATR 5 period. We'll have to change this indicator to 5. And that will make a very sensitive, very dramatic volatility stop loss. You can see now with the ATR 5, it's just taking the last 5 candles into consideration. It's very dramatic, and we're probably going to get wild swings from 10 pips here to 30 pips here. We've got the multiplier times 2 here as well. So let's see how we go with that. So we click sell, and straight away the market trailed the stop all the way down here. So we're going to be taking a reading of 25 pips. So we should be about 50 pips away. Yep, that's correct. Okay, let's see if the market continues to dive down here. Okay, we're getting thinner. Okay, look at the trailing stop now. As the market does nothing, basically here we're getting very thin candles. The volatility is drying up within the last 5 candles, and we're seeing the ATR drop off the radar here, and we're gone from a 24 pip stop down to basically a 19 pip stop, and we're only at 14 for the current candle. So we can see basically our stop distance is only about 20 or so pips at the moment. Well, from the lowest price, it's about 30. Let's quickly. Oh, all right. So we had a 35 pip stop loss there. So now the market pumped up to about 35 pips on the ATR times 2. So we should be about 70 pips away now. We can visually see the trailing stop, and there we go. We finally stopped out. Volatility dropped off there, and we only got about to, we basically halved our reading there from 35 to about 16.15. The stop loss just basically squeezed right near market price there. And I guess the idea with this kind of volatility based trading stop is when the market is very crazy and the volatility is very high and wide, then we want our stop loss to give the market a lot of room. And when the market's trading very tight, that's when we sort of like ram our stop very close to the market, just in case it decides to break out of that tight range and blow the other way or something like that. So that's the volatility stop loss. Hopefully that was a decent demonstration for you. Got one more, so let's reset and have a look at the last one. Okay, for the final trailing stop option, we're going to be looking at trailing by a channel, and I've got a little indicator here to visualize that. So this is let's look at the inputs, channel 20. So we definitely want a channel 20 there too to mimic that. Okay, this is a Donchian channel. I think that's how you say it. But this is the same channel that the turtle traders used, okay? And basically it's fairly simple. I like the idea of this channel. The upper line marks the highest price that was available within the last whatever you set candle. So in this case 20. So you see right here, it will look back 20 candles and it will display the highest price, which was obviously there. That channel will remain at that price until obviously another higher price is made, and it's only checking back obviously that last 20 candles. Obviously with the lower part of the channel, that's looking at the low price, so the lowest price that did occur within the last 20 candles. You can make this 10, 20, 50, 1,000, whatever you want, okay? So the idea with this trailing stop is we're trailing down, basically trying to keep our trailing stop above previous swing highs and lows. This is be the objective of this kind of trailing stop, giving us a decent buffer there too. So we set our channel period. Let's target our stop loss at actually the channel high there. So that's 7.1. Okay, so we started off, we got our stop loss. Let me zoom in. We've got our stop loss at the channel high. So as that channel high starts to descend, our trailing stop should flow on with that as well. So let's start to fast forward here. Okay, not doing anything because that channel is basically remaining at those highs there, because it is up here is the highest price within the last 20 candles. But as soon as this candle is no longer part of the latest 20 candles, then the channel will start to decline to the next available highest price within 20 candles that it's looking at. Okay, so let's keep going, and should be fairly soon we'll get the dive. There we go, there's the dive. So that candle came out of the picture, and then we dive down to the nearest available highest price, which is down here. So obviously this is the last 20 candles, and obviously that has the highest price there. And we can see that the trailing stop trailed down very nicely, and it's tracking that very well. So as we go down, you can see it's just tracking that beautifully. Let's put this on so we can follow along. Track the screen. Okay, this is very nice for this move. Stop loss, very healthy trailing stop loss here. Very effective trailing stop loss for nice market moves, actually tracking that channel. We can see the market finally was able to build enough strength to break the previous high of the last 20 candles there, and that's where our stop got taken out. Okay, I'll give you a bullish example of this because we've only been doing bearish examples. All right, so I've positioned myself here just before a big bull run on the pound. Let's do a bullish example. So we'll set it at the channel low there. So 148475, and we do not want that target there. Trailing by channel 20. Let's buy it. Okay, off we go. No, what happened to the bull run? This must be it here. 146372, buy. Okay, let's go. Oh, very close, but we are trailing up with that panel. Very close. All right, try again. See if we can catch a decent move. Yeah, well, you can see that the trailing stop is tracking the bottom part of the channel there, tracking the channel lows as the market moves up. You can see it in action there, so we're tracking it nicely, and that's it, we're stopped out. So that is the trailing stop feature. Let's, while we're here, we'll cover the break-even events as well. So the break-even events are basically the same as a trailing stop, but they're just a one-off event. All right, so they just the panel will just move to break-even and then withdraw from the trade unless you have a trailing stop or something selected. Again, with break-even stop loss monitors here, if we want a break-even stop, you'll be able to find it in the trade monitor here too. So let's try a break-even when we achieve risk reward 1 to 1. So as soon as the market moves in favor, 1 times our risk, and we hit that 1 to 1, it will move to break even and then remove control from the trade and let it go. So are we in a good position to do this? We'll try and buy. We'll have to put a manual stop. Let's try it down here. This is our risk here. So we're looking at about 263 pips. So the market needs to move up to about, say, there. As soon as the market, if it does move up there, that's when the stop will get moved to break even. So let's see how we go. We're very close. Very close. There we go. So we moved, we just hit it there on this candle, and the stop loss, where's the marker? There's the stop loss marker. It moved to break even straight away like that. All right, and we also have pips achieved. Okay, so we want to move to break even once we've achieved a 50 pip profit. So let's try and sell here. So we need the market just to move 50 pips, which is just a tiny bit down there. So we only need it to move just down here, and then that will trigger the break-even event. All right, and now that the trade's triggered, we can see status waiting for break-even. And let's, whoop, okay, that was too quick. Looks like we'll have to buy a trade here. That must have been a news event or something like that. Now we're waiting for 100 pips, and there we go. We've moved up. We moved up 100 pips from our entry there. Okay, and the stop basically came, I don't know if it was this one or this one, but basically moved to break even, and that's it. The panel's finished with it. Then the trailing stop will kick in. So that is the trailing stop management part of the panel here. It's pretty cool. I mean, it does, it's a bit of a Swiss Army knife, right? So we've got a lot of different options we can use for a trailing stop, and it also, you just throw it onto the end of whatever other trade parameters you want here, your entry, stop loss strategy. We've got other strategies here, straddle and everything like that we can throw into the trade as well. So you can start to see the benefits of the tool, especially the different trailing stop options that you have, at the touch of a button here. And the fact that we have the trade monitor as well, we can remove the trailing stops when we want. And also the third feature where it does save your trade configuration, your metadata of your trade. So when you do close the panel down and you decide to reopen it, it's an accident or something like that, when the panel does reload, it will restore your trades and continue where it left off. So you had a trailing stop by channel or something like that, okay, it'll just pick up and continue trailing that channel stop and resume it, basically what it was doing after a unfortunate shutdown or something like that, power off or something. It's annoying when you have a tool like that might be doing a trailing stop or something like that, and it crashes or the power goes out or something like that, and then you've lost that connection there with the tool and the trade. It won't pick up where it left off, kind of thing. Another thing to note is you don't need any indicators or anything like that to make the trailing stops work. You just need the panel. It calculates the channels and everything inside internally. Okay, I just put the indicators on the screen here so we can just visualize the trailing stop and how it's working. All right. Okay, thanks for watching. I hope you do decide to use the tool. I hope you enjoy it. I'm always open for suggestions. We can also always add other trailing stops and things like that, as long as it's, I'm not going to add every single indicator. Most of the indicator data you can basically derive from like moving averages and channels and things like that. Someone did request the fractals indicator be put in, but you can use the channel to basically mirror that, because the fractals are using swing highs and lows, but the channel's also using that as well. So basically the channel's going to give you the same effect, and EMAs and stuff like that. And most of the indicators use some sort of glorified moving average, right? So there's a lot of options here. Yeah. Look, I hope you enjoy the tool. Thanks for watching, and I'll be back soon with some more tutorials covering the other cool features that this panel has as well. So keep an eye out for those, and yeah, best of luck on the charts, and hope you enjoy the panel.